Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October 31st, 2016. Now to get started this week we're going to begin where we always do with the all-important US dollar index. Now the dollar came under fire on Friday based around new rumors, not rumors I guess, but fact based around the FBI reopening the Clinton investigation. Not exactly a shocker here, guys, with as corrupt as this woman is. The US now facing uncertainty with their election, so it's very we're likely to have a very choppy week ahead here, guys, until we find out what is actually going on with this new potential investigation from the FBI. So again, the dollar is likely going to struggle unless the Democrats can put this fire out very quickly, which I just don't think they can, because we've got WikiLeaks coming out, and this is not at all, shouldn't come as a surprise to most based around the history of this woman. So it's difficult to say how the market's going to react, but right now a lot of uncertainty here. So we've got what appears to be a top forming at just about the 99 level on the dollar index. The key 18-day predicted moving average now coming in at 97.89. This is a critical level. We can see our indicators from VantagePoint are starting to point down. Our neural index, our predicted MACD, appears to be trying to put a top in place. All of this points towards a significant corrective move in the dollar index. And again, this is being triggered solely by this new potential investigation into the Clintons. So once again, very confusing why the Democrats put Hillary Clinton forth as their candidate. Knowing the history of this, it was just a matter of time before this came out. So we'll see how this one plays out, but right now the dollar likely to come under fire. Now, the U.S. equities here are also coming under pressure with this new potential investigation, but we remain locked in this channel here, this bigger, broader channel. We have a significant top in place at or about the 2190 area. And we are back again retesting this Brexit high breakout point. So you can see that we have tested this multiple times where your order flow guys are buying off of here. But VantagePoint is very clearly suggesting that this is going lower. Now our predicted short, medium, and long-term differences, our neural index right here, predicted MACD. Now the predicted RSI is my biggest concern for the equity markets here. 36.1, we've broken below here. This suggests that we could go significantly lower on the S&P 500, which could indirectly drag the global equity markets down here. Now, what I also want to point out here, I'm just going to clear this so everybody can see this, is a series of lower highs. In a series of lower lows actually, but it can be argued that this could go either way. But for the equity traders here, this represents, and your Forex traders, the 2136. We've closed at 2123.80. Very bearish setup for the equity markets. So be very careful if you continue to hear rumors of this is a buying opportunity on dips. In my respectful opinion, I don't think necessarily that the major analysts have this right. And I think with this new Clinton scandal, yet another Clinton scandal, it's a problem, because basically they assumed that she was going to win, and now it's very much up in the air. So this is going to potentially, we can see we've got a big top forming on the European equity markets. The Nikkei has definitely been one of the stronger global indices, but can it survive this most recent shock to the U.S. markets and the U.S. political system? Well, that's left to be seen here, guys, but I suspect that the global equity markets in general are going to sell off here. Now with oil, I've talked about the $52 per barrel mark on oil for a couple of weeks now. That continues to hold. Oil breaking down, pushing lower. Predicted short, medium, and long-term differences. We'll just bring this up so everybody can see this critical vantage point area here, all pointing lower. Our predicted RSI breaking. So essentially, guys, we've had a corrective move on oil, but the the major downtrend on oil, nothing has changed here. As I continue to repeat week after week, there is some very good buying, short-term buying opportunity, but now the key vantage point level coming in at 49.62. Very bearish close of 48.70, suggesting that oil will see further downside next week. Now, with gold could absolutely recover here, guys, based around what's going on in the U.S. Now, a lot of times when we hear rumors like this, they're not actually, it doesn't really go anywhere. But I think there is some meat on the bone here with the FBI looking back into Clinton. The Anthony Weiner is now being dragged into this. We all remember this classic Democrat, which was just a complete embarrassment. I think everybody knows what he did, but essentially right now we can see that we've got this key vantage point level coming in at 1274. We're closing at 1276. Now, once again, gold is not really getting the bump up here based around demand. It's getting based around uncertainty particularly in the U.S. markets around this election. This election is different than any other election I personally have ever seen them before. So, it is going to be difficult, but I do suspect that gold will start making further gains this week unless the Democrats are able to put this fire out, which I'm not convinced they can, because again, it's not necessarily just the fact that the FBI is potentially reopening this investigation, but WikiLeaks is also saying they have a lot of information they're getting ready to release. So this is definitely, the market is going to be very choppy next week, extremely choppy actually next week, and any hint, that even if Clinton gets elected, that she could potentially be impeached right after that election, would be a very, very short honeymoon, to say the least. So watch the key level 1274 next week. If we can hold above this, then gold will likely rally back up to the top of the range towards the 1360 mark. Now, as we come into our major Forex pairs, the euro certainly does. If we look at the euro chart and the gold chart, guys, here they are almost identical. The euro, had a huge rally up at the end of the day. The euro certainly loved the fact that the Clintons are in trouble yet again. So we've rallied all the way back up to the 109.88 mark, closing right on that key vantage point level. Once again, if they can't put this fire out, the euro will rally with gold as the market moves out of the US dollar. Now we can see again our predicted short, medium, and long-term differences. Our neural index all rising higher. We've got a potential cross on our predicted MACD, and our predicted RSI coming out of heavily oversold territory. Now, the yearly opening price again on this, or the lower Brexit bar, which we look at, is right around this essentially down around 108.50. We have a significant support down there. The buyers simply use that as leverage to get back into the long position. It's difficult to say whether the euro can make any significant gains. I'm not really convinced of that at this particular time. It's possible, but again, if the U.S. is able to the Democrats are able to put out this mess that Hillary's created, then the euro could succumb and fail off this key vantage point level. We could have a false bull trap on Monday, only for the euro to turn around and drop lower. So we'll be watching this area around 109.88, very closely. Now, this again is causing problems for the U.S. Swiss franc. The basically very high correlation to Euro US. One goes up, one goes down. So in this particular case, we can see the U.S. Swiss franc is closed just below that that 18-day predicted moving average from VantagePoint, a critical level 98.85. We're closing at 98.75. Not a decisive bearish move, but it certainly does look that shorts would be the better play next week. Looking at the predicted short, medium, and long-term differences, we do have a crossover on the predicted MACD, and the predicted RSI is falling heavily. So we've got a problem here, guys, to say the least. But again, it's a fundamental-based problem, not a technical one. So it could basically, if the fundamental passes, U.S. Swiss could resume its uptrend. We have been moving higher for about 3 weeks now. A corrective move is perfectly normal here, but ultimately, if they can put the fire out, we would still be looking at buying U.S. dollars. Not necessarily though here, guys, against the British pound. 123.46, even with the problems in the US, it's still not helping out the British pound. The British pound continues to fail here. We've had a corrective move back up. We're channeling sideways, but again, we would have to overtake that critical VantagePoint 18-day predicted moving average at 123.46. Only if we get above that area, guys, next week and stay a sustained break of 123.46, excuse me, would take the pressure off of the downside. Selling into rallies clearly has been the better play here, and we will continue to do so as long as that area holds. Now, as we come into the dollar yen this week, dollar yen, a very interesting pair here. Now, our critical VantagePoint 18-day predicted EMA has held for basically about 2 weeks. Going back into last week's Forex Weekly Outlook, we have held this entire week running along this 18-day predicted EMA, closing there, coming down and testing that area early in the week, 103.82, only to rally. We've still managed to close at 104.70, breaking above this range that we've had here, a congested range right here. It's pushed higher, but then the dollar yen succumbed to basically the announcement of course, the Clinton scandal, yet another scandal with her. So when we look at this right now, 103.82, we're closing 107.70, but we're likely heading back to the top of the Brexit range. Now, this is perfectly normal. We had buyers coming in. The top of that Brexit range is 107, but if the global equity markets fail and we move into a risk-off environment, this will not hold. We will very quickly move back into the 103.82 area, and I think to start the week, actually, guys, here, shorts may be the better play. Looking at the S&P 500, the DAX, the Nikkei, if we get into a risk-off scenario, the equities sell off, expect dollar yen to fall next week. But again, on the flip side of that, if the Clintons and the Democrats can somehow lie their way out of this, then essentially, the dollar will recover across the board, and you will see basically things reverse again. So we're going to see very choppy trade on Monday, Tuesday, and Wednesday of next week. Be very cautious of that. Now, when we look at the USCAD pair here, we can see the USCAD, our critical level, 132.56, excuse me. We've had a big run up here. This 134 level up here has been a very significant level for the US-Canadian pair. So we're holding above that Brexit top here right around 131, basically long around 131, but we could see a retest of 132.56 to begin the week based on, again, what's happened here, this change of events on Friday. But I think ultimately this is a buying opportunity on dips here, guys. Our key VantagePoint level, our predicted differences starting to top out a little bit around the 100 mark. We're starting to slowly move towards overbought. A corrective move is perfectly natural. Let it pull back a little bit here to begin the week, but I still say longs are absolutely the better play after we get a corrective move lower and the Clinton scandal starts to shake out again. Now, as we move into our non-European currencies, still commodity currencies, but non-European here, guys, and I think you're going to potentially see some of your market players move towards the Aussie and the New Zealand, the higher yielding currencies. The only problem is they're carry trade based currencies, meaning we want to hold Aussie and sell it against a lower yielding currency like the yen, the dollar, the Swiss franc. So the critical level from VantagePoint that we all really need to be mindful of, 76.11, we need a clean break of the 77 area in these swing tops up here to really get this trade moving. 76.11, we're closing at 75.93, so you can see we're banging into that. We're testing that key VantagePoint level on dollar weakness, and basically, if people are moving out of the US dollar, it doesn't necessarily mean that the euro is going to be their first choice. It could be the Aussie, and it could also be our New Zealand currency. Now, our New Zealand currency has struggled to try and desperately break the critical VantagePoint 18-day predicted EMA, which is coming in again at the 71.66 area. Now, at this 71.66 area, we're testing this. We've closed right here, 71.64. We can see that we've been banging up against this key VantagePoint level all week. We've hit it every single day, and every single day it's failed. Now with my own direct clients, it's basically suggesting, we're selling into this level, closing the trade, sell into the level, close the trade, and just repeat until you can't do the trade anymore. And right now, a clean break of 71.66 here, guys. This will send New Zealand US back up into the top of the Brexit range, potentially towards the 73 area, maybe even higher. But again, the market is desperately, it's a classic battle here between the bulls and the bears, fighting it out right around a very identifiable level, which of course is 71.66. So remember, a break of that, we buy immediately. If it holds, then we're probably coming into the lower part of the Brexit range, which is down below the 70-cent mark. So there's two potential trades here, guys. Potentially a very, very good short trade next week, but also potentially a very good long on if we get dollar weakness right across the board.